Hey guys, it is Max. Thanks for joining my channel. Appreciate you guys for being here. I don't think anyone's here yet, but that's fine. That is fine and dandy. All right, you guys happy to get that week over with? This week wasn't as bad as last week, or it was bad, but only if you were short. That 10% rally was something else. And then the next day when we almost hit limits on the NASDAQ. I heard that the NASDAQ actually was 7% down, but it has 2 minutes to reset itself. And it was 7% down, but then in less than 2 minutes, it was back under 7% down. So we never did hit. We hit the, I like this guy. I should have watched this. They got this guy from BlackRock on. I forget his name, but he's really smart on CNBC. Anyway, I'll try to keep one eye on him. All right, guys. Well, let's look at the charts. What is that guy's name? Rick something or is that? Anyway. All right. So here's a 30-minute chart of the SPY. And I think I have a longer chart. And then I have an a daily chart right here. I wanted to focus in on the daily chart. Look at this daily bar. Yesterday's daily bar was an inside day, meaning yesterday's range was inside the day before's range. Well, lots of people take it as a signal. Whichever way that you break out of an inside bar, that's the way the market's telling you it wants to go. So in other words, we broke out above, we closed above the high of yesterday. So that's the market telling us that it, according to some people, telling us that it wants to go up. Had it broken through the low, then that would be the market telling us it wanted to go down. Either that or it's a fake out. It's possible it could break through the high and then, then the market could still go down Monday or something. I mean, but it's a good sign. It's a good sign. If you're a bull, you want to break inside days on the bullish side. And so this was a good sign for the market. All right, so that's SPY. Let's look at some Bitcoin action here. Okay, well, Bitcoin kind of making kind of a wedge pattern is what that looks like to me, right? Yeah, it's a huge wedge pattern. You could watch this. Let's just make the wedge right now. Come on. Oh my gosh, you got to be kidding me. Sorry about this. But when Bitcoin breaks out of this wedge, kind of the same thing as it's a similar theory to the breaking out of an inside day, whichever side of the wedge it breaks out of, assuming it's not a fake out, is a good sign. Is a good sign. So we're coming, so we'll monitor this. Like, for instance, we broke out of the wedge on the downside earlier this week, but it turned out to be a fake out because we're back right in the wedge. So, the same thing could happen to the top side. We may break out to the top side and then it could be a fake out, but we're gonna keep an eye on it. But this is gosh, you got to be kidding me. This is a market that is showing indecision, and so we'll see. It has potential energy, they say. It's coiled. Some people will say it's coiled like a snake and it's going to explode one way or the other. I'm hoping it goes this way. I don't see why we can't go up here to 96,000 and get back up here in this higher trading range. But in order to do that, we would have to break out of the wedge on the bullish side. So we shall see. All right, so let's look at the model portfolio now, I guess. Hey, Susan, thank you for being here. I appreciate you for being here. Now let's look at the model portfolio today and see how Max did. I was up 1.28%, but SPY was up 1.78. And bonds were up 1%. And so a SPY and bond 60-40 mix was up 1.48. Well, I underperformed it all. I underperformed the SPY. I outperformed bonds, but I underperformed the 60-40. Anyway, that's fine because I was way outperforming on the way down. And that's more what I'm concerned about. I don't like to lose any extra money. That's just not what I like. So anyway, let's look here and see kind of how it broke out. So here's the allocations. These are new as of yesterday. If you didn't see my morning show, these are new allocations. If you watched last week, I had like 26% in YQQQ. Took some out of there, put some into GPTY and ULTY. And also I bought a little YSPY and I started a new position, kind of a small starter position in TLTW. Not the most exciting of a high yield fund, as far as yield goes and stuff, but I'm putting it in there for diversification purposes. It is perfectly uncorrelated, or at least last time I checked, it was almost perfectly uncorrelated to the stock market. So for me, it's a good diversification tool. Now, those are the allocations. This is the actual results. So all this is that other page. So like if I have 14% of my portfolio on YQQQ and say YQQQ was up 1 point, then I would get 14 basis points to my bottom line through, because of my percentage of it. So this is what this next chart shows. My percentage of YQQQ is earning me 71 basis points. Okay, that's pretty good, but unfortunately, my bullish positions in GPTY and ULTY are costing me a little bit of money today, but my gold is helping out. Gold made me 36 basis points, or gold mining, high yield, whatever. Zomo down a little bit today. So anyway, here's kind of the bottom line, and this is wrong right here. Max is not down 136. I don't know why that's wrong. We were dealing with this at lunch also. It's jacked up. I forgot to fix it between now and lunch. We could just look at this right here and tell what because I'm just the average of this. So, well, plus it's right on here. I'm up 1%, right? Yeah, 1.28. Okay. Well, I don't know why it's saying down on that other one. Maybe I'll have it fixed by Monday. Hopefully I'll have it fixed by Monday. It just makes me mad. All right, we aren't going to look at it. All right, so let's look at the buffer report and see how that stuff's going. Hopefully it's going better than... All right, GPTY verse. Oh, geez, we just had a bear cross on the S&P 500. By the time those things happen, a bear cross is when the 50-period moving average crosses under the 200-period moving average. By the time those things happen, the sell-off's already happened. You to made money on that signal, you would have wanted to sell it about 3 weeks ago. So it's moving averages are lagging, big time lagging signals. And that's why I never use moving over crossovers. The actual crossover lags. But what I will talk about all the time is just yes or no. Is the market on top of the 200-day or under the 200-day? That's not lagging. That's just an observation. But if you're waiting for the 20 to cross the 50 and then be on top of the 200, those can work. There's nothing. A lot of systems are kind of based on that kind of stuff. It's lagging though. Anyway, all right. So let's see what was doing well today. Look at this. Misty up 10%, or Mr. up 10%, Misty up 9%. That's incredible. Even Murney got a piece of the action. Even AMD got a piece of the action. This is wonderful. Like to see that, right? All right. Let's look at the index buffer report. T-SPY down. I'm not worried about T-SPY. It's got to be something wrong. I guess we need to look at it. Right? Maybe they probably paid a dividend today, and then it didn't get. They weren't accounting for it in the price or something. Well, let's just look here. T-SPY is from Tap Alpha, friend of the channel, Sai Katara. That's his baby. That is his baby. Okay, so this thing was down 2.2% today. So what did my thing say? Did it say 2.2? No, it said 404. I mean, what the heck? I mean, anyway, it was down 2.2% today. So I wonder what happened to him. They're bringing in money. They're the past year they've raised money. They're down 14% year to date, but that's not too bad considering what kind of year we've had. People are somebody bought a bunch of this fund the other day. March 10th, somebody got freaking $8 million worth. They did an $8 million creation. Well, anyway, they just hit their 6-month anniversary, February 18th, I just saw. Anyway, okay. Well, I don't know what's going on with that one, but I know it's not down 4%. Let's just say it's not. I knew that was too much. There's no way. I mean, 4%. Come on. All right, look at WD. Despite the same token, this one's not up 4%. That's ridiculous. I don't. My Google Sheets has to be so bad. They could be an easy thing to do to pull stock prices, but it's wrong all the time. So WDT, what is their deal? Yeah, it's up 2.45%. So that's pretty good. That's pretty good, right? It's still not 4% though. Why does Google Sheets have to suck so bad? I just don't understand it. It's almost not even worth looking at these. I mean, look at LFGY up 6%, SVOL. That's good for. I have some people that are interested in SVOL and ZVOL, and I like to see that because it was hurting people for a few days there, especially ZVOL or especially SVOL. YMAX outperformed, Clip outperformed. All right, so let's look at the Altiverse and then the LFGY verse, or I guess this is the LFGY verse. Well, that's impressive. That is impressive right there. Up 5%. All their stocks are up. Gotta love it. They said on CNBC every sector in the market was up today. You know, every whatever. I guess sector. They said something different. But look at old GPTY. So now GPTY was up. I just don't understand why Google Sheets has to suck so bad. Look, this whole thing, GPTY wasn't even up. I was looking over here. Gosh damn it, I hate this freaking. It's not even worth looking at this stuff. Anyway, you guys have anything you guys want to talk about? I'm done with Google Sheets. It just sucks. It just absolutely sucks. I cannot do a good presentation. Save my freaking life. Anyway, if there's anything you guys want to talk about, now would be the great time. Like I say, Susan, I appreciate you for being here. Yeah, ULTY is awesome. Sorry about my Google Sheets. I said it was on my freaking. How can this be so freaking bad every freaking time? It's never right. Never for more than a day. I stayed up till like 2:00 in the morning fixing all this last night. I just don't understand this. This is the simplest thing. Just show me what it's up. It's up or it's down. What in the hell? Anyway, I don't get it. ULTY. Yeah, right here. Look, today's change. This is Google's fault, not mine. Google Finance showing today's change is down 159 basis points. And it's just not reality. I mean, I don't even like to do spreadsheets when everything works. So when things don't work, I don't even know what to say. It should be so freaking easy. It's not freaking brain surgery. I mean, there it is right there, equals Google Finance, I4. I just want to show you guys, I4 is the ticker right there, I4, YQQQ. So this is saying YQQQ is down 1.59%. Oh, well, Y triple Q was down 1 point because it's inverse. All right. I was getting that mixed up with GPTY. All right. I'll shut up now. So GPTY was up 27 basis points and Alti was up 2.15 basis points. Now that's awesome right there. And that's what I was trying to show. See, 2.15, and then you look at your allocation of Alti. Your portfolio, or my portfolio in this case, my brother-in-law's, has 23% allocation. So let's just call that 25% to make the math easier. So then we would go multiply that by the 2.15 that ULTY was up today. So we'll just basically think about a quarter of, it's about 50 cents. Anyway, and you can see on the sheet right here, 215, and I said 50 cents and I hit it exactly right. Look at that. I just estimated it and I did it exactly right. Well, anyway, all right. Well, yeah. So the only thing that was down was GDXY. Okay. Well, I can deal with that. GDXY is supposed to be down today because the market's up. I'm fine with that. I was thinking that was GPTY that was down. GPTY is not allowed to be down on a day the market's up this big, right? But yes, Alti looks awesome. And it doesn't even look half as awesome as GDXY. Look at that, up 3.86. See, we'll just round that up to 4 and do the math on this. And we'll round 17% up to 20%. So 20% is 1/5. I'll round this up to 4, so I need 1/5 of 4, and that comes to that right there. So the GDXY position accounted for 70 basis points to the good side, to the positive side. Even little Zomo, which I just have a 4% allocation of, gave me 15 positive basis points. So that is good. That is really good, right? All right. Anything you guys want to talk about, I'd be happy to answer the questions. But if not, I'm going to take Jax to the park. Okay, earnings coming up next week. So let's talk about those. I know Grateful Trader is probably going to do some earnings trades, or I know I'm going to do some earnings trades. Unless the market starts cratering again. As long as that last low is holding, I'll show you what I'm looking at. What I'm looking at is bank earnings. We had a few today, and they were good. There's a few more next week. I want to say it's Wells Fargo maybe, or it's right there. No, BlackRock. BlackRock. Oh, no, that's this week's. I'm sorry, next week's. Right here. There it is. American Express. Okay. So American Express, Blackstone, not BlackRock, Blackstone, Schwab. Anyway, I'm going to probably be looking at some kind of bullish something on Schwab or American Express. Hell, Schwab just made $2.1 billion yesterday or something. You heard that on the news. I think he means him personally, and I don't really think he means he meant that. I think he means that his net worth went up that much. Because when the market's up 10%, and let's say you have a net worth of $5 billion, you make about 500,000. So Trump was saying that Charles Schwab made like $2 billion, but if it's just because of his net worth going up due to the 10% rise in stocks, he would have to have 20 billion. And I don't think Charles Schwab has 20 billion. Who knows? Maybe Charles Schwab made a leveraged bet or something. I don't even know that. I bet Charles Schwab has he's out of San Francisco. I bet he's worth about 5 billion, 10 billion. Okay. I wonder if I was right. Is he really from San Francisco? I'm pretty good at trivia, but I think he is. I think he's out of San Francisco, and he was worth 5 billion. That's why I said 5 billion. His company became is not worth. If I was him, I'd live down in Carmel and commute up to San Francisco. Yeah, he was born in Sacramento, so he's a Californian. Huh. Well, anyway, but if you have 10 billion and the market takes it 10% face ripper, you did make about $1 billion. Just if you're perform as well as the market does. Anyway, I wish I made $2 billion yesterday. I had puts. I've done bad this week. But the good thing was I bought puts like a month ago, and I've been rolling them down every week, rolling them. So I've been doing all right. But I rolled them down last week, and this week they're dead because they expired. They're dead. So I need to start looking for another profit center. So like I say, I think, but if the market will get back to normal, I'm going to start doing some earnings trades and some more pairs trading. So I'll probably do a long on American Express and then maybe a short on the SPY or something. Try to do some kind of pairs trade next week. Anyway, if you guys are interested in that kind of stuff, stick around, and we talk about it all the time in Discord. And join us in Discord, and you can talk with us there, I guess. I wanted to show you guys how this big trade came out. I've been following these big trades. This one guy had a huge YOLO today. Expiration, April. All right, these haven't expired yet, so. Date created, maybe. Let's just look at that. Date created. TMDX, active, expire, close. Here it is. This is the one. These are the trades I want to show you. I called this one was a big balls trade of the day, maybe the week, but this was from yesterday. But the option expired. I guess the option expired yesterday. But this guy, he was going to make 200,000. I think his max. I was trying to show the max loss. It was like 48 million or something. Anyway, he got his credit. The market finished up yesterday. He got his 234,000. Then there was another trade here. I wanted to see if the guy hit it. Oh, I don't know, but that reminds me of something else. Hey, this is a stock I'm interested in. I'm probably going to play. Now, this stock has earnings next week, and their prices come down, and I'm interested in this one. I'm going to do something bullish on this one, APLD. Let's see when their earnings are. I think it's Monday. But those American Express and APLD were the two that I was looking at for next week. But I've got to find something to trade because, like, I can't rely on those puts anymore. They're dead. I did well last week and the week before, but I kept rolling them out, rolling down, rolling them out, rolling down, rolling them out, and anyway, they died. I'll probably just put them right back on next week. Though probably what I'll do is play that American Express trade. But then I'm going to play puts to, in case the market craters while I'm waiting for Thursday to get here. So I'll probably just put them back on. It's great to have puts on, I think, when we're under the 200-day moving average, because if you get a sudden sell-off, then you can monetize it. Okay, so next earnings is April 14th, 11th, 12th, 13th, 14th. And it's after the bell. Okay, well, I might do something in this also Monday, so be looking for that. I need to figure out the name of that freaking. I always just call it APLD because this is Applied Digital or something. SPD, Grateful Trader. Do you like SPD? Let's see. I've checked it out before. I'm going to tell you. It's SPD. I forget. Oh, yeah, it's the S&P Dividend Fund. It's like their highest paying dividend stocks. It pays like 4% instead of 2% or something, right? Oh, no. Okay, this is different. Okay, yeah, I've checked out this fund before too. So this is just an index fund. They own the SPY, but they also own puts. So the theory is they should do better on the way down. But now let's see. But look at their own chart. I mean, I guess they did do better. They finally cashed in. It went down far enough. Finally, now this one really worked out nice because they did lose money with the rest of the market for most of that decline. But then their hedges finally kicked in, and now they're back up here. That's impressive. That is really impressive. So let's look at something else here. That fund right there is just this, basically the same thing as TGIF, from Innovator Funds, where you can't lose any money. But TGIF has a term; it goes from June to June in a 2-year period or something. That one is just, it keeps a constant hedge on. But TGIF makes it where you can't lose any money if you hold it for 2 years. It's impossible. The put locks out any downside. A strategy like this, you can lose money. You can see, even though it was protected, if you would have got nervous and sold the day before the protection kicked in, you would have had a loss. I mean, nothing works all the time, but yeah. So let's look at this other one, SPC. Have you heard of SPC? Or no, that's not it. There's another one that's maybe it's this one, SPUC. SPUC. It's the SPY plus upside convexity. It's the opposite. It's somebody that owns an index fund and then buys calls to give you a little juice on the upside. Of course, it's going to make you perform worse on the downside because of the leverage. We all know how that works. So let's see how this one did. Well, this one pulled all the way back from 43 to 33. It pulled back 25% when the market was just down about 15, or the SPY was just down 12%. So it pulled back twice as far as the market. Now it has, but SPUC means plus upside convexity. So in a big up market, this ought to do well. So I was thinking it should have done well the day the market was up 10%, and it did. The fund went from 33.82 to, we'll call it 34 to 37. It's 10%. Okay, so the fund was up 10%, just like the market. Yeah, Simplify has some great liquid alternative funds. They have downside convexity, they have upside. They have, in Simplify, have, don't they do this one too? No, that's Cambria Tail Risk. Let's just do it this way. Simplify has some really interesting funds as far as liquid alts go. Oh, this Foxy, somebody in our Discord is all over Foxy. I forget who it was. Was it Charles? Or no, it wasn't Charles. IGAEM. Y Gold. I wonder if I should have got Y Gold instead of GDXY. I just really like, gosh, look at that. I just really like Jay and Sylvia and that crew. But so that's why everything's been equal. If there's a Defiance or a Yield Max product, I'll just go with that. But I mean, what's the matter with this thing? Why didn't I go with this? So I think I did look at it, and here's what's the matter with it. That doesn't pay enough of a dividend. December, January. It's been around for half a year and has paid less than 1%. Because, I mean, the one mandate I have managing my brother-in-law's money is it has to be high yield. So I'm not going to put something in his thing that gets 4% or 6%. In fact, I hated to even put TLTW in there because it's not really high yield. It only gets 15% or not very much. But I did it because of the diversity. I did it for the non-correlation, the diversification. It pays 15%. That's pretty good. I mean, 15% is definitely. I'd say anything over 10, I guess, is high yield. So yeah, that's high yield. Yeah, but I like those Simplify funds. I'll tell you what, I'm going to go check those out. There's one that I want to talk about, and I can't think of the ticker, and that's why I'm kind of stalling. But I'll find it and I'll bring it to you guys in Discord and tell you whatever I was thinking about or whatever. Where's the darn show? Did I lose the freaking show? Jackson, what are you doing? Anyway, I don't know if people are here or not, but I don't see the damn show. I don't see the damn show. Anyway, there it is. There it is. Yeah, okay. Tell versus Chaos. Okay, Grateful Trader. I didn't like Tell when I reviewed it, but let's go. Let's go look at it. I would just say Chaos. And I really like Dorsey Wright Short in that situation too. Uh, but we'll let the winner take on Dorsey Wright Short funds. All right, so Tell versus Chaos. Let's just go back to the start of the year. Let's see how they did in the pullback. Well, okay. Well, I was wrong about Tell, wasn't I? What? How did I miss that? I reviewed it once and I hated it. But gosh. But to be fair, this was the biggest volatility explosion we've had in forever. I mean, I think what I was looking at is I was looking at the past 10 years and we hadn't moved hardly enough for Tell to have kicked in at all. But this last move definitely kicked Tell in. Boy, that's incredible. That is incredible. Okay, so now let's go. Let's compare it to the Dorsey Wright Short Fund since I said I would. We'll compare. See, Dorsey Wright Short is DWSH. Wow, look at that. Would you look at that? Okay. Well, I mean, you know, it's great to have so many options, and there's so many choices out there nowadays for investors. I mean, there's a niche for every niche. I mean, I'm obsessed with long volatility, and the one thing they haven't brought out is a pure long volatility fund. I want a fund that owns a freaking straddle. It owns a straddle, and it's selling options against it in the daily time frame to finance the straddle, and it owns like a monthly straddle. It'll make money if the market goes way up or if the market goes way down. I don't know why that's so hard. I don't know why someone has to come out with that shit. Jay Pestruccelli almost came out with that, but it was based on TLT. But it was a similar concept. And there was TRES. It wasn't very popular, but I told Jay, put that out on the Nasdaq. Let's get a Nasdaq fund. That is a true long volatility fund where you could buy it when you wanted to have exposure to long volatility. I do it myself, and you guys have seen me do it myself. What I do, I usually get a bullish earning stock, and then I buy SPY puts. But the other day, last week, I bought NVIDIA in Q puts, and that one actually worked out really well. The NVIDIA worked out terrible, but the Q puts paid out. But that's how I do it myself. Just keep balance. But I would love for these guys to come out with a true long volatility fund. Tell is not Tell is not really, when I mean true long volatility, Tell won't make money also if the market goes up real fast. I want a fund that'll make money if the market goes up real fast or down real fast, and there just isn't one like that out there. Tell is a good one for if the market goes down real fast. Let's check out another one. What did you guys remember? I had somebody on my show named from Accruance Capital. I forget his name. I really liked him. He's out of Dallas and Maryland. But anyway, his fund is called XVol. Let's see how it's been doing. It has a built-in VIX hedge, so it in theory should be doing well. Now I checked it the other day and it had not been doing well yet, but it could have been that the market hadn't moved far enough to kick in the guy's hedge. Let's give XVol another chance, and in fact, let's compare XVol to. Let's just do it like this. Let's compare XVol to. Let's compare XVol to WDT, doesn't it? Well, and I wanted to go just with the pullback, but looks like it's performing right there with WDT. It has moved up a little bit lately. You could see where it's taken a bit anyway, but it's not what I would expect it to look like. Okay, so I want to look at something better here. Okay, X-Ball from Accruance Capital. The guy's name was Rob Emmerich. Rob Emmerich the second, I think. Um, in August, when volatility blew up, this fund, because of its fixed hedge, made a ton of money one day. But then you remember the market did a V bottom. So then the hedge, lost money and went back to normal. Well, I was hoping after seeing that X-Fall would have had a bar that looks kind of like that over here somewhere. I don't know. Maybe they've changed something, but right here it is. VIX, they have 30 calls, 7% of their portfolio is in the VIX 30 strike call. Well, here they have, and they sold the 45 strike call to finance it. This is a call spread. They own the 30, short the 45. Well, anyway, for whatever reason, I was disappointed in this performance. I'm also disappointed because people have sold this fund. It used to have like $50 million under management. But then Rob told me he converted a bunch of his wealth management business. And anyway, they had different business model. And so they lost a bunch of assets under management. So how does this have negative 15? How does that even happen? See, it says negative 15 right there. I guess the assets under management are 3. The negative 15 is just the amount this year. Yeah, that's the amount it's changed in the past year, I guess. I love hedge funds. I love funds that like TEL, but really more like Chaos, or really more like Dorsey Wright Short. I love funds. What I really like is YQQ because it pays you 20%. What's the matter with that one? I mean, that's a really good. Chaos does hedge, but it doesn't pay an income. Anyway, they're different. They're different types of funds. Chaos, yes. Now that is. Let's look at this. Let's look over a bigger period of time. Let's go. Let's do Chaos and let's do TEL, and let's go back a year. Let's go back to 2024. Oh, well, that didn't go back far enough. Let's go back to 2022 or something. Yes, TEL bleeds. TEL bleeds. And most long volatility funds do bleed. That's because that's the effect of leverage. That is actually erosion, decay, and depletion. All these people are obsessed with erosion, decay, and depletion, or they're obsessed with erosion. That is erosion. What TEL's doing is eroding like a big dog. So look, the problem with these funds is if you're using it for an allocation, you allocated last March, it bled off all your money. And even after you get the big move, the historic move you want, you're still underwater. Now, I mean, I guess it could still help the rest of your portfolio out. I mean, because it's going up when other stuff's going down. But yeah, Chaos kind of has a gradual upward slope to it. But Chaos didn't make the massive up move. Chaos isn't as highly sensitive to volatility either. It just made a slight up move right there. But now let's look at Dorsey Wright Short. Let's compare TEL to Dorsey Wright, because Dorsey Wright Short will also bleed because you're betting against the market. Yeah. Chaos doesn't appear to bleed. I don't know. I mean, you saw it. It doesn't appear to bleed. Chaos it's a different strategy. What they're doing on there is it's something. It's an option trade that I don't know. It has something to do with gamma, and they're flattening out their gamma somehow, and it's some kind of. But I'll do a report on it. I'm always interested in that kind of stuff. But that's that Chaos. I don't know how I don't know. I couldn't tell you exactly how they're doing that, but it is very interesting. But yeah, So yeah, chaos does not appear to bleed. So so bleed is probably different to different people, but I'm saying bleed is a fund that can't maintain its NAV in a bullish market. Um, so yeah, but I'll message you on Discord about that. That sounds great. All right, guys. Well, I'm going to get out of here. Great Summit. I appreciate you for being here. I didn't see you. I hope I didn't miss. I said hi to Susan already. I hope I didn't miss Norman. I didn't see him in here, but anyway, Norman, if you're here and just haven't commented, have a great weekend. Or all of you guys have a great weekend. I haven't done any. I need to do some new content this weekend. Anyway, if anyone has any suggestions on some new content for me to do, put it in Discord. But I've got to get some new content out. Maybe I might do it on these simplify funds, the plus convexity and plus downside convexity. I think that's what I'm going to do it on. I need to do that. I'm going to do it on the simplify. I also will put in chaos, tell, simplify, and we'll look at all those funds. How about that? That's it. That's what I'm going to do. I'm going to write the script tonight. So be looking for that video. Be looking for that video, guys. Thank you so much for being here, and I appreciate everything. And yeah, go ULTY. ULTY is the bomb. Where this is Team ULTY here, right? All right, guys. I appreciate y'all. I'll see you in Discord. See you.